You haven't had an accident in 10 years. No speeding tickets, no claims. You've been the perfect driver. So why did your car insurance just double? Today I'm exposing exactly how insurance companies calculate your rates and the sneaky factors that have nothing to do with your driving. Here's the dirty secret. Your driving record is only about 30% of your rate. The other 70%? They're judging you on things you'd never expect. Factor number 1, your credit score. Yes, your credit score affects your car insurance. Bad credit can double your premium, even if you've never crashed a car in your life. Insurance companies say people with low credit file more claims. But here's the truth. They've found a legal way to charge poor people more money. That's the real reason. Factor number 2, your job title. A lawyer pays less than a bartender for the exact same coverage. A doctor pays less than a delivery driver. Same car, same record, different price. They claim certain jobs mean you're more responsible. What they really mean is certain jobs mean you have more money to squeeze out of you later. Factor number 3, your zip code. Move 10 minutes down the road into a different neighborhood, your rate can jump 30%. Same you, same car, different address. They say it's about crime rates and accident frequency. But really, it's legalized discrimination against people who live in certain areas. And it's completely normal to them. Factor number 4, your education level. College degree holders pay less than people without degrees. Your ability to do algebra apparently makes you a better driver somehow. This has zero logic. But it predicts income, and income predicts how much they can charge you before you switch companies. That's the real math they're doing. Factor number 5, whether you own a home. Homeowners get discounts, renters pay more, because apparently signing a mortgage makes you drive more carefully. Obviously ridiculous. They know homeowners have more to lose, more assets, more stability. Translation? You're trapped, and they can charge you more because you won't leave. Now here's what actually makes your rate spike. Shopping around less often. Insurance companies literally track how often you get quotes. Loyal customers get punished. They call it price optimization, meaning they charge you the maximum amount they think you'll pay before switching. Loyal customers pay the most because they never check. Here's the fix. Quote your insurance every single renewal period, every 6 months. Doesn't matter if you like your company. The quote alone signals you might leave. Some companies will lower your rate just because you called asking about it. They'd rather keep you at lower profit than lose you to a competitor. Another trick, bundle, then unbundle. Get a quote for home and auto together, then get separate quotes. Sometimes bundling saves money. Sometimes it costs more. Always check both. Insurance agents won't tell you this because bundling earns them bigger commissions. They're not lying. They're just not volunteering information that costs them money. Ask about discounts they didn't mention. Low mileage discount. Good student discount. Professional organization discounts. Defensive driving course discount. They won't offer these. You must ask specifically. I've seen people save $300 per year just by asking about discounts that were available but never applied. The system rewards people who ask questions. Pay annually instead of monthly. Monthly payments usually include fees. Could be 5 to 10% extra per year, just for the convenience of spreading out payments. If you can afford the lump sum, pay it. You're essentially giving yourself a discount for having cash available. The savings add up over multiple years. Raise your deductible strategically. Going from $250 to $500 deductible can save 15%. From $500 to $1,000 saves even more. Do the math. If you haven't filed a claim in 10 years, that extra deductible risk costs you nothing. But the premium savings are real money every single month. Here's something even worse. Insurance companies share data with each other. If you get a quote from one company, others might know and adjust their prices against you. The entire industry works together to maximize what they're all using the same data, the same tricks, the same playbook. One more thing, telematics devices, those safe driver trackers they offer, they're collecting data to use against you later. One hard break and your discount disappears permanently. They frame it as a discount opportunity. It's actually a surveillance tool. They're gathering evidence they'll use to raise your rates the moment they can justify it legally. Never let your coverage lapse, even for one day. A gap in coverage is a massive red flag. Companies will charge you like a brand new risky driver, even if you've been insured for 20 years. If you're switching companies, make sure the new policy starts before the old one ends. Overlap by one day if you have to. That gap penalty is brutal and lasts for years. Also, check your coverage limits. Many people are overinsured on cheap cars and underinsured on liability. A 15-year-old car doesn't need comprehensive coverage that costs more than the car's value. Review what you're actually paying for. Roadside assistance might be duplicated through your credit card. Rental car coverage might overlap with your card benefits. Cut the fat ruthlessly. Quick recap. Insurance rates have almost nothing to do with driving skill. Credit score, job, zip code, education, home ownership all matter more. Shop every renewal. Ask about every discount. Your action step today. Call your insurance company. Ask what discounts you qualify for that aren't currently applied. Then get 3 competitor quotes before your next renewal hits.